It's the same old money just wearing a new mask. The whole world has gone crazy about artificial intelligence. 200 billion this year alone. A technology that justified a massive inflow of capital. Hi, this is Ivan Marchena, Chief Communication Officer at A-Lens, and today we will speak about the AI boom. What's behind the hype? Lately, it feels like the whole world has gone crazy about artificial intelligence. Every day, there is another headline. AI saved the US economy from a recession. AI helps central banks predict inflation. AI already manage investment better than humans. The IMF states it's officially. Investment in artificial intelligence are what kept the US economy out of a recession. But one question came to my mind. When I tried to look past the headlines and delve deeper, what actually saved the economy? The intelligence or the massive flows of capital hidden behind its name? When technology becomes a cover for a moving money, the AI market today isn't just another sector, it's a facade, a screen for capital flowing out of all exotic markets like real estate, heavy industry and energy, and into the only place that can still show growth. Look at what's happening. Funds are moving their focus from hard assets to digital ones. Venture capital reports are stuffed with the words AI powered. Even for the most basic business models, even construction companies now claim they are using AI for predictions models. Why? Because it's a new narrative for all money. AI has become what the blockchain revolution once was, a technology that justified a massive inflow of capital. Smart money figured it out long ago. When a new ideology appears, it always creates a new opportunity to legitimize the redistribution of wealth. Where the capital is flowing and why? Investment in artificial intelligence has already passed 200 billion this year alone. But if you look at where this money is actually going, it gets more interesting. Not to the startups themselves, not to R&D labs, it's flowing into infrastructure. Data centers, energy, GPU supply chains, storage and cloud capacity. AI has become the excuse to upgrade the old industrial base under a new brand. What was once called data processing is now called AI computing. And capital is moving to where energy and computational resource can be controlled. This is the new monetization of the world's infrastructure. The illusion of growth. The British pound is up. The Swedish krona is up. Everyone's yelling about a tech renaissance. But listen, currency don't rise because of new techs. They rise because of the money inflow. And when all money pretends to be a new brilliant innovations, it creates a fake economic boom. The GDP numbers look good. The stock market is up. The reports sounds convincing. But it's a trick. It's the same old money just wearing a new mask. Think of it like a play. AI is the set, the money is the actor, and we are the audience who bought a ticket for this show. Why smart money plays a different game? Smart money isn't betting on AI itself. They are betting on the companies that control the foundation, the ones who own the data centers, who make the microchips, who lock down the energy contracts. Because now, computing power is becoming the real currency. It used to be about oil and gold. Now it's about electricity and raw processing power. And I am not being poetic here. If you control the computer, you control everything that runs on data. That means financial markets and even the value of money itself. AI as a new form of dependency. AI looks like a tool, but it's becoming something else, a new middleman that stands between you and reality. It decides that what you see, what you believe is true, and what choice you make. And as more systems are handed over to algorithms, the entire economy becomes dependent on whoever controls those algorithms. This isn't just a tech question, it's a question of power. We say AI is changing the world. But we rarely ask whose AI, on whose servers does it run, who gets access to the ton of data that we give away for free. The new financial system banks use to control credit and liquidity. Now that control is moving to the companies that own the tech foundation everything runs on. Look at Nvidia, a company that used to make graphics cards now basically controls the energy for the entire tech market's growth. Its stock price moved to the Nasdaq like the price of oil once moved the Dow Jones. Tech companies are becoming the new central banks, but instead of printing money, they are printing the raw power for the digital world. Why investors are losing touch with reality? We have a new generation of investors now. They aren't investing in business model, they are investing in the story. They aren't buying an asset, they are buying a fairy tale about the future. This is dangerous because every story ends when people stop believing, and faith is the most fragile asset on the market. That's why smart money plays a different game. They don't believe the story. They look for the choke points, the companies that control the flow of data and capital. The illusion of accessibility. It seems like AI is democratizing technology, but in reality, it's concentrating power like never before. Training a model costs millions. You need energy contracts and data centers. That's impossible for small businesses, startups, or researchers. All the real computing power is held by 5 or 6 giant players, and in this closed loop we see a familiar picture: capital, control, dependency. They just call it artificial intelligence now. What should an investor do? First, don't invest in AI as a trend. That's like investing in the word internet in the 1999. Invest in what allows AI to exist: energy, data storage, connectivity, security, and raw computing power. Second, don't follow the news, follow the standard setters. In any news tech era, the winners aren't the ones who launch the first products. The winners are the ones whose standards become the rules everyone has to follow. And third, remember this: real intelligence in finance isn't artificial, it's analytical. It's the ability to see the connection the news isn't showing you. A word about us. When we built the A-Lens ecosystem, we made a decision from the start to build structure and ignore trends. We focus on infrastructure of businesses, the ones the economy can function without: energy, manufacturing, agriculture, logistics. These aren't the result of a digital boom, they are its foundation. These are the projects that create real stability because they generate actual cash flow and create jobs. It's not just another token with zero purpose. We're building a bridge between capital and infrastructure, so investors can put their money not into another story about the future, but into what's already moving the world. That's our philosophy. Don't chase trends, invest in the base that makes these trends even possible. The AI revolution looks like a bright new era of innovation, but maybe it's just a new form of an old game, where intelligence isn't about what can think, but about what can be controlled. And while the world is busy arguing whether AI will replace people or not, smart money is already replacing the real economy with a simulation of growth. So the real question isn't who is smarter, humans or AI. The question is, who will be the first to figure out where the technology ends and the flow of capital begins?